Welcome back to the Unusual Whales YouTube channel. As always, everything provided is strictly for informational or educational purposes. None of the following should be seen as financial advice. Back with another flow recap here. Today the ticker is SMH, the VanEck Semiconductor ETF. This flow combines some good options education as well as some Unusual Whales how-to, so it makes for a great example. On June 10th, we saw a complex trade consisting of 4 legs being opened. As the tweet states, it looks like a call debit spread using the 265 and 295 strikes, and a put credit spread using the 230 and 170 strikes for the September monthly expiration. At the time of the trade, SMH was trading at $260. On its own, a call debit spread and a put credit spread would be bullish, but when put on at the same time by presumably the same trader, it makes it far more bullish than the sum of its parts. A link to these option strategy pages you see will be in the description box below. How do we know the trade is being opened? We can very likely reason that all 4 legs are being opened here, given the volume to open interest relationship on all of the contracts. In some cases, such as the 295 strike, it is much more pronounced than others, but given that all 4 contracts are seeing the same volume at the same time, we can reason that the same trader is responsible for all of this activity. The total position size is approximately 3,900 contracts. Let's quickly calculate the overall cost or the potential credit for putting this trade on. Here are the average prices of the 265-295 call spread and the 230-170 put spread at the time of the screenshot. The 265 call at 1636, the 295 call at 563, the 230 put at 646, and the long 170 put at $1. So you take the long call at 1636, you subtract 563, and you get 1073 debit for the call spread. You take the short put at 646, subtract 1, and you get 546 credit for the put spread. You take the cost of the debit spread at 1073 and subtract the credit you received from the credit spread, credit of 546, and you're left with 527 final, $527 that is. I've added the max risk and max gain totals to the screen. Pause the video if you need to. So we see this trade. How can we keep tabs on it? Conceptually, tracking a whale can be done through volume and open interest. We have many videos on how to do this. I'll have some linked in the description box below, but how can you do it on Unusual Whales? If you're looking at any trade in the flow, you can add it to a watch list by clicking the plus icon. If you don't see this icon, you can turn it on from the columns menu. Any contract that has been added will be accessible from both your contract lookup page as well as your options watch list. Links to both pages will be in the description below. During market hours, I like to sit on the watch list sorted by volume. This lets me see if there's any large volume on any flows that I'm tracking. I started seeing volume on all 4 contracts, which tipped me off that they might be closing. Similarly to how they entered the trade, they exited in chunks throughout the day, as seen in this update tweet that I made. Here we're looking at a 30-day chart for the entire trade. Note the volumes that took place yesterday, 3,900 give or take on all 4 contracts, the exact same sizing as the day they entered. If we take the average price of all 4 contracts, we can calculate how much they closed the total position for in exactly the same way that we did to calculate their overall cost of entry. So we have a quick learning opportunity here. For those who've always heard me harp on about the 4 different ways to trade an option, we've gotten to see this on full display here. So to enter their trade, they bought to open the 265C. Now they will be selling to close. To enter the trade on the short leg, they sold to open the 295C. They will now be buying to close. The 230 put was sold to open. These will be bought to close. The 170 put was bought to open. These will be, you guessed it, sold to close. So now back to the math of it all here. So if they sell their 265C at 2703, and then they buy to close their 295C at 1083, and then they buy to close their 230p at 270, and then sell to close their 170p. All the numbers are here. The final value is 1856. So when they closed their position, they received 1856 per contract. Remember, the entry price was 527. That's good for more than a 3 times gain. SMH started the trade here at 260 and was trading at 280 when the trade was closed. That's going to wrap it up for this video. I hope this flow recap was helpful. As a reminder, our July 4th sale is ongoing for another day, ending July 9th at 11:59 p.m. Pacific. Lock in a discounted rate and follow the flow. See you guys next time.